I'm 100% committed to North Dakota. I mean, that place is going to change the perception of hydrocarbons.
Recently, in an interview, Kevin O'Leary revealed that he's put 20% of his portfolio in crypto, including tokens and blockchain firms. He also said that he owns 32 different positions in crypto right now. And in another interview, he said that he thinks Bitcoin mining is going to save the world. He also said that he's invested in hydro-powered Bitcoin mining, which is the next big thing. He was implying that Bitcoin's future looks good. And in another interview, he talked about how banning Bitcoin would be a really stupid interview. In this one, he also touched upon his predictions and what he thought about the recent crash. If you want to hear Kevin's comments on the crypto market and more about his current holdings, then watch this video all the way to the finish, and don't forget to press the like button and share your thoughts on her interview. Now, let's look at his interview.
One of my businesses that I spend a lot of time on is indexing. And indexing is creating subsets of the S&P for sovereign wealth or pension plans. So let's say you're a country wealthy with oil. You don't need to invest in more oil stocks. So you say to an indexer like me, give me an index of the S&P X energy, X airlines. And we do that. That's what we do. And there's a big industry doing that. Recently, 3 years ago, most sovereign wealth funds and institutions are not permitted to own Bitcoin, but they want to be exposed to the volatility of Bitcoin. So there was a direct correlation at that time with Bitcoin miners and their stock prices, the public miners. So most indexers just basically indexed the public miners in the US, Marathon, Riot, Hut 8, Hive, and it was a direct correlation. And it was working just great until all of a sudden that Larry Fink ESG letter came out.
Yeah.
And then all of a sudden, a memorandum from the SEC was issued saying that they're going to demand carbon audits, no different than your financial audits. If you claim carbon neutrality, you have to get an auditor to sign off on that. All of the Bitcoin miners out there are using carbon credits to claim carbon neutrality. And everybody knows that carbon credits are bullshit. And so there's no auditor that is going to sign that. Those stocks got killed. And the reason they got killed was every indexer sold all of them.
Right.
Indexing is about knowing where the puck is going. It's the old Gretzky analogy, not where it is right now. And the pressure on those stocks, they no longer trade in correlation with Bitcoin anymore. It's a long answer to your question because now I'm part of a different movement of companies that are saying, okay, proof of work is going to have to be done with power that is sustainable and renewable. And that would be wind, solar, nuclear, or hydro. So one of the largest hydro facilities for Bitcoin mining is being built out right now in northern Norway. We call it the Norway model, where it's 100% excess hydro. And the company built out its own transmission line. So they spent millions building that for the benefit of that community, 3,000 people. The heat off the computers is recaptured and grows hothouse tomatoes. And they built a canning plant so they could store it during the winter. That's the new version of Bitcoin mining. And so my job now is to find senators and governors that have policy in their states and have hydro or nuclear power that are willing to support the Norway model. And those states specifically are Montana, North Dakota, Florida, and Texas, of course. And we're working in all of those jurisdictions. You just saw New York, technically ban Bitcoin mining today. They did that vote. Now, it's not law yet. It's got to go through the Senate, but what a waste. They have excess power. They don't understand Bitcoin. It's a political knee-jerk reaction. But we had a project in New York, and we're just taking that capital and those jobs, and we're getting out of there, like everybody else will. Sometimes governments do bad things. They don't know what they're doing. It's sad to see that happen in technology because other states will compete with them and they will lose all those jobs. It has one of two attributes. It's got renewable source, which would either be wind, solar, which is intermittent. Wind and solar is intermittent. So it's good for Bitcoin mining, but not good for data centers. Data centers have to be up 24 hours a day. And the other attribute they would have is pro-business policy. But there is one unique attribute, unique almost in the world, and that is North Dakota with their salt caves. So they have a huge amount of subterranean storage capability of carbon. So they have, every time you extract a fracking barrel of oil, it moves towards more gas in it. The last barrel of oil that comes out of a spent fracking field is gas. It's not oil. So the ratio of gas keeps going up. You have to flare it. Well, why waste that energy? If you had a way to flare it, create electricity, but take the carbon, extract it, and pump it underground, which they can do. They're the most advanced state in the union doing this. They've advanced carbon sequestration so far ahead of everybody else. I went to meet there with leadership, the governor and the senator together, and I brought the whole team, including the guys from Norway, with me. We spent a couple of days there, and I'm 100% committed to North Dakota. I mean, that place is going to change the perception of hydrocarbons. When you're an indexer, you're constantly creating indices in multiple markets. So let's take Europe. We have an index that is 50 European stocks that is very popular. And so what we try and do is find the best balance sheets. And Europe is basically made up of Switzerland, so the Swiss franc, Europe itself, Germany and France, so that's the euro as a currency, and then the London Stock Exchange, which is in British pounds. Now, let's say you're putting out $100 million index, just for start. You seed an index with $100 million. I have to take the $100 million US dollars, allocate it into 3 different currencies, go through an FX exchange where I get clipped basis points, no value whatsoever, zero value, buy the stocks on the native exchanges, manage their positions. Usually a mandate like that is no more than 5% in any one stock. So if it doubles in price, you got to sell half of it. Go back from that, Swiss franc back into US dollars, get clipped again, no value whatsoever. I mean, it is such a waste of capital for everybody. It's useless friction. Now think ahead to crypto. Let's just talk about payment systems. Let's just talk USDC, just one. There's many opportunities to do stablecoins, but if we could get agreement amongst regulators, let's say the Toomey bill, which I'm proud to be involved with, and the Haggerty bill, same thing, just focus on stablecoins, just one thing, because the largest market on earth is currency trading. Yeah. It's trillions of dollars, and it's incredibly inefficient. So their proposal is very simple. Okay, let's audit these stablecoins every 30 days, agree to an audit, and also agree that any asset that's backing the coin is no more than 12 months in duration. Very simple mandate. I get it. Everybody gets it. Now, the risk here is if one coin agrees to under that mandate and gets licensed, the others, it's going to be one of these situations. I won't mention any names, but the king may not have any clothes.
Right.
And that's going to be ugly. However, if we can get the legislation through, I could potentially only use one payment system for all of the stocks that I'm buying in all these different currencies. And all of a sudden, the efficiency of that, the billions in savings, it's at our fingertips. I know with certainty, and I'll make a statement now, and I've said it before, that within a decade, crypto and blockchain technology will be the 12th sector of the S&P. Right now, there's 11 sectors. It will become the 12th. The only decision any of us as investors have to make now is how much should I allocate to crypto now, and how should I deploy it? How much diversification should I have? So in my head, the big event is going to be policy on crypto. It will open the floodgates to capital from pension and sovereign, which we don't have. People talk about Bitcoin, 800 billion. That's nothing. That's nothing in financial services. It's not even a pimple. It's nothing. Nobody owns it. I mean, yes, there's some high net worth individuals, some hedge funds, and a few retail investors, but Bitcoin is a nothing burger in financial services. However, the potential would be that we do provide regulation, and all of a sudden, in a sovereign fund where they might put 1% allocation, but that sovereign fund is $100 billion. That's a small sovereign fund. So I'm investing ahead of that. I'm making the assumption that if I'm buying in, at 35 to 40,000, that I'll see this at 150, 250,000 one day when it gets allocated and indexed. Because if an indexer says I'm putting 1% allocation, if the coin drops 20%, which is very volatile, they buy back up to 1%. Yeah. So you have a bid. They're the bid. They're the market all the time. 24/7, they're the market. We don't have that right now. So the conference like this is very important to note who makes up the population of attendees. And here I can point to institutions that I indexed for that are walking around with baseball bats on or hats on because they don't want to be seen, but they're here to learn, and government officials from multiple countries. So this tells you the tone is towards policy.